Yeah, AI is an interesting one. One of the kids from the Boy Scout troop that I was in is over at DeepMind, and I don't know whether or not it's going to take thousands of years or if AI is already here. AI is an interesting one. One of the kids from the Boy Scout troop that a window open with myself talking in the back. That was confusing. But I don't know whether or not it's going to take forever or if it's already here. But one of the interesting things they said was that their heuristic for whether or not they finally solved the strong AI problem is they offer it some problem to solve, and instead of them having to start breaking it down, whatever, StarCraft or Go or chess or whatever, it would just say, oh, that's okay, I can take it from here. That's like their go-to for like, all right, that's when we solved it. But who knows? I guess we'll see. But all right, it's another SacPie, September 2nd. Welcome, everyone. Thanks for showing up. For everyone who's just joining, watching on YouTube, thanks for tuning in. And tonight we've got an awesome guest. Have you spoken in the past, Calvin? I know you've been to a bunch of SacPies.
Yeah, I believe Shay and I went to one of them in person with pizza.
Yeah.
A lovely co-working space.
Yeah, and is this the first time you've presented? I think it might be.
Yeah, I think so. This is the first time I'm presenting the molecule protocol. I think last time we were talking about Titans.
Yeah, awesome. Cool. Well, all right. So SacPie, as many of you may know, was founded by Josh Miller a number of years back. I can never remember if it's 2013 or 2017. I want to say 2017, but SacPie, based in Sacramento, that's where the Sac comes from, has now grown into something much different thanks to COVID and the power of Zoom and YouTube. Do we have anyone in here that's not from Sacramento? Personally, I'm hailing from Southern
Los Angeles here.
Los Angeles. We've got Carter. We got
Santa Rosa.
I'm in LA as well.
Reno.
All right, multiple states.
Yeah, I moved to Las Vegas.
You're in Vegas now? Oh, I didn't know that. Oh, that's cool.
Yeah.
It's hot as hell down there.
Yeah, and probably pretty smoky.
Well, it's autumn almost, so the weather is getting better. I just survived the summer, so I'm glad I do.
Calvin's there for all the casino buffets, right? Those amazing buffets at the casinos.
Yeah, definitely. There's a lot of good food and less traffic compared to the Bay Area. But I do miss Elk Grove and Sacramento. Just a beautiful place, man.
Cool. I have a friend that runs a startup incubator. It was initially in San Francisco, and I think they have an office in San Francisco still. But their thing is you've got office space, kind of like, like a WeWork type scenario, or Urban Hive, if anyone here is from like OG SacPie. But instead of having to pay like a weekly or daily or monthly for a desk, all you have to do is be a founder, and then like there's no charge whatsoever. And then the guy that runs the place, he's an awesome guy to talk to. Always has like a million ideas, but he just loves talking to founders because founders have a very different approach to life in general, and he loves crypto, so I'm sure he'd love this project. But he's getting an office set up in Vegas, and it's supposed to be done around Halloween, so I'll connect you guys.
So you mean we guys can get free office space from him?
Basically, but,
that's dope, man.
Yeah, but you have to be a founder, but you're already a founder, so there we go. But if you guys want to connect on that or any other topics through the SacPie channels we have available, one is in the Slack channel that's run by a company called SacTech. That top QR code or that link can work. The other one is a Discord that I run myself with my company, Brazen Studios. It's a Discord. That link or that QR code will work. Screenshot it if you like. Get out of the way for a second there. I'll put links to it in the description in the YouTube. Or maybe I can put them in the actual thing here right now, maybe. Let's see if I can do this quick enough. Not too awkward. No, pretty awkward. There we go. Cool. There's the stack tick one.
Gotta live for the awkward, man.
Yeah, okay. Yeah, just lean into it, you know. But yeah, if you guys ever have any questions about what's going on, invite invalid. Oh no. Wait, the Discord one is dead. Oh, I might have burned him earlier today. I'll put up another one. In a bit. Once Calvin gets going, I'll put the link up there. I gotta get my Discord going if I want to make that happen. We also have a number of other channels available. You can follow us on Twitter at sac_pi. There's apparently someone out there whose name is Sacby who already camped the handle. Oh well. We have a subreddit that is largely unutilized because we posted the Zoom link once and we got Zoom bombed out of our minds. It was kind of fun, but also it was a little, a little rough on the administration. We've also got a Facebook group and a Facebook page. I do my best to post stuff there. One of these days I'll present on some Python scripts I'm working for social media management that'll help me do this a little bit more. Right now I'm just doing it with some checklists and whole bunch of elbow grease. If anyone wants to join up with some greasy elbows and help me out, or maybe some social media management scripts, let's talk. Because StackPy could help, and if you got those scripts, well, I got some contracts we could pick up. So if we've got the time, and I think we do, if everyone could take a moment to frame themselves up, smile for the camera. I'm in Brady Bunch mode, so I'll take pictures of everyone. So smile for the camera if you'd like to be on. Terry, Taneem, Lola, and Mike, Eric, if you like, now is a chance. But 3, 2, 1. Sweet. Perfect. I think we might actually have enough with that one to make the next Brady Bunch photo. The frame was like, it was too many photos necessarily. It was necessary. And I think maybe the last like 3 times we got maybe 3 or 4 people. But thanks for participating. We'll have a new one next time. All right, so without further ado, I'd like to introduce our speaker for tonight, Calvin Pack, multiple entrepreneur, not even just serial entrepreneur. How many things are you running right now? Like 3? You doing something?
No, everything's related. So I'll consider this like a big one.
Cool. Well, I don't want to ruin it too much, but I understand this is the culmination of a product that came out of a hackathon and is a relatively new product. But the hackathon was in 2020, right?
Yeah, it's in November last year.
November, yeah. So running with it and finally decided to grace us with his presentation tonight. So I will hand it over to Calvin. I believe you should be able to share. I think
All right.
Got that.
Not yet.
Cool. All right. I will hand over the sharing to you. So Calvin, take it away. Oh, before we get started, I'll interject here and there with questions, but I encourage everyone to interrupt and make this more conversational rather than your typical auditorium where we hold the questions till the end. I find it's a little bit more interesting, and also we recognize that there's a variety of skill levels here. So if there's anything that doesn't really make sense, please feel free to speak up and just make it all that more informational. All right, Calvin.
All right, let me share my screen. Hey, hi everyone. Thanks for listening to the Molecule Protocol. It's going to be a very casual presentation because this is kind of like an idea since last year, but kind of like in a stale mode until recently. And then it's something I'm still trying to collect feedback. So by no means this is the final product or it's ready for prime time, but definitely I think it will be very soon and it's very much in demand. So give you a quick history of the project. I had this idea back in October 2020 during one of the hackathons. Basically, I'll go into a technical detail, and then I got interested from Bloom, which is a KYC company, identity company And we guys did a collaboration in the following hackathon from ETH Global. And then we did a project called Credit 3, which is a under-collateralized lending project. And in March, I think they feature our project in their blog, in the company blog. And then in around May, I think rather than just having it on Ethereum, I kind of envision that, you know, it's going to be a very good opportunity and a better product on Solana. So started designing on the V2, and then we started doing more real product experimentation back in June, July, you know, all under stealth mode, kind of like one person, two people, just like experimenting how it works. And then we have bigger plans moving forward. So let me run through the deck quickly. Feel free to start me anytime for any questions. So this is the deck, Molecule Protocol V2, and it's gonna be a middleware protocol, and I explain what it means. And we're trying to design it for a compliant DeFi. So if you experience with DEX or marketplaces, especially the NFT marketplace, so you know the sender and the recipient, they can just like initiate a transaction, and then as long as they're following the ERC20 721 token standard, you can just like boom, done the transaction without any kind of permission. It's permissionless and everything. So we are kind of like, you know, to some people maybe stepping back one step. We actually want to put some gatekeeper in the middle, saying that, okay, there must be some kind of criteria you need to satisfy for both the sender and the recipient in order to get the transaction approved. So the name, I know it's confusing, molecules. The reason I name it molecules, the way that, you know, if you look at this logo, it's like ERC 721 token and 20 token combination. I just take it inspiration from like my elementary chemistry. I'm never good in chemistry, but I remember this formula, 2H2 plus O2. Don't laugh at me, Eric. So this is like where the inspiration come from. So I want to do something very similar, like, you know, this like example of a molecule structure that you can define. It's taken from two different smart contracts for ERC 721, which is the NFT token standard. So we can do something like a KYC token standard, meaning the only time that you're gonna have that token in your wallet is a service provider, a KYC company actually verifies your identity and you pass the KYC check. And they will mint a token, put it into your wallet, and that becomes one of the criteria of enabling any kind of transaction. So if you imagine, like, you know, it's a manual process, right? It's any service provider right now. A law firm can ask you to sign a rental contract, any kind of legal document, and then as long as that law firm put connect the contract with a NFT smart contract, then you can mint a token representing that you now satisfy the requirement of signing the legal doc. And then you can put a price on it, like in any kind of like ERC20. But I think it's more interesting in the NFT implementation. So a lot of people talking about DeFi, I think the sole purpose is about permissionless, enabling the unbanked. But because it's becoming so successful, generating such a high yield, what about the people who are already banked? So how can we take advantage of the DeFi that's been developed and then make it available to the banked people? So this is where the Molecule Protocol can contribute to the infrastructure and making things compliant for the banked. So technology-wise, you know, the DeFi has proven it's super efficient and it's way lower cost than the existing financial infrastructure. And that's why it's you know, attractive to be used as the new technology layer. So we want to build something like really open platform, meaning like, you know, and even for compliance, there are formats like ERC 1400 from Polymath. You know, I really like the company, but if it's controlled by only one company rather than you can provide a service provider model, and just like incentives on crypto all the way. I think it's just going to be easier for everyone, and then more community based rather than too much under control of one government or one company. So this is kind of like the inception of the idea. So during my hackathon, I built some like fancier images. So the centralized exchanges versus not decentralized. If you go to Binance, if you go to Coinbase, they did the KYC, AML, all the required compliance check on you before you can trade, but they charge more fee, and also you don't control a private key. So decentralized is like the opposite. But with a molecule protocol, we can kind of like combine benefits of both and create a new platform that you can participate. So the concept is pretty simple, as I described earlier. We just issue a KYC token using an NFT smart contract, and then put it into your wallet. So in any exchanges that's enabled by the molecule protocol, they will check, let's say this kind of transaction requires this molecule smart contract. And then that molecule smart contract essentially will just check the existence of a certain ERC 721 token and then return true or false. So if it's true, then the transaction can go through. If it's false, then the transaction will be rejected. So it's a very simple concept. We did a demo using the KYC example with Bloom. They have integration, callbacks, and everything. And then also we enable a real estate company can use the same structure. They haven't used this structure yet, but they have Fabrica as the company actually done land transaction using a NFT with over 100 transactions performed in 2020, and they are still growing. So the third example use case is we actually did a decentralized credit product with Bloom, which used TransUnion, and then placing a credit bucket. Basically, if you are A paper, really good credit, to medium credit, to more like a prime candidate, and then you just put it into different buckets, and without revealing any personal information, obviously, and put it into your wallet. And then we actually can use Aave's credit delegation law, which allow investors to invest as long as you don't borrow. The credit will be available to a third party. So we structure something very similar to the credit card management system, and that's kind of like the credit-free project is about. It's also submitted as a hackathon project, and it's being linked in these introductions. I'm going to send a link. This one's a public page. The deck is not public yet because we're still making changes, but we will make it public at some point and put it under this link here. So the technical implementation is pretty simple, actually. This is kind of like the flow chart, right? The logic. So how do you actually implement it? Define a molecule structure from the molecule factory. So basically all you need to do is just define like which ERC 721 smart contract you want to be a part of the molecule structure that you define here. Deploy the smart contract and then integrate that with a DEX and marketplace. So it sounds pretty simple idea, but in the V1, so when we were doing the V1, we realized like, you cannot change the protocol itself because the assets are already there. The only thing we can change is through the lending protocol or through the Uniswap, right? The DEXs, we can totally just fork it. So the way of doing this is I just described the whitelisting smart contract, and then we have to do the forks from the DeFi. It's kind of like we have to play our own sushi. So we have to become the sushi chef, fork the Uniswap V2, and then inject just one or like one functional block for 5 lines of code into it to enable the molecule protocol. So we guys did a fork of Compound and successfully integrated. And then we also did the on-chain credit proof of concept. So currently we are in the process of learning how to fork Uniswap V2. And then this is work in progress. Basically, we are able to do it. And then just like, in order to launch it, there's like a bunch of things you need to do. And also like, if you want to fork Uniswap, you have to think about the initial liquidity. How does it come from? I think Sushi did something magical, like, connecting some liquidity to the DEXs, and then at least initially, before they have liquidity. But the project that we are dealing with, we are not connecting to the DEXs because we want the liquidity from scratch. We want everybody participate in this exchange needs to be KYC. So it's going to be a fresh start anyways. And then proof of concept is also done because it's very simple just to mint a token representing a borrowing legal document agreement. So V2, I talked briefly, started in May because I've been involved in learning and building on Solana with the team on building DEXs and option protocol AMMs on Solana. So from that experience, I actually learned a lot the products on Solana and the possibilities. So if you, for those of you who don't know Solana, you probably heard of it like, last 2 weeks. It shot up basically from this year, like the sold price was like around $4 in the beginning of the year. Now it's like over $110. So a lot of people started talking about it because of the price movement. They are like number 8 blockchain by market cap right now. But Solana, if I want to make 2 differentiation, like from Ethereum, I'll say number 1, it's not sharded, and the transaction cost is super low. The block time is about 400 milliseconds. So it's perfect for the real-time experience. This is point number 1. So the point number 2 is that there are a lot of institutions behind Solana right now. And that's, I personally think that's the reason for the price hike and everything, because liquidity matters. When you have a DEX that's similar to a real-time experience, that makes a huge difference. And then just imagine if you want to transfer between USDT on your Binance or to USDC, right? 2 stable coins. On Ethereum, you are essentially paying like $50, $100 transaction fee. And then on Solana side, for the same transaction with the native tokens, the cost is about $10 for 1 million transaction. So it's a huge difference. And you see, I think a lot of move like stable coin transactions move from Tron or some like centralized exchanges to Solana. I saw it from one of the Solana guys' presentation. I'm not, so it's a secondhand information. Just want to put a disclaimer there, but that's what I heard. It's happening, and it's happening. It's gonna be huge on Solana. So that brings liquidity and the exchange and everything. I think it makes sense. And also imagine the price feed and the status update on Solana. If the block time is 400 sub-second, right? Basically 400 millisecond or 800, you can get real-time data almost. And then Solana also come out with something called a permissioned order book with the Serum project. And that essentially allow us not to fork Serum and then just put a layer, put molecule protocol as a layer on top of Solana, so we can provide compliant products. Basically, just provide all the users KYC. And with the real-time oracles, we can do even crazier things like real-time IP block. So from an exchange, you have a user, their wallet, and then you can steal, like, the server, the UI layer needs a server where we capture the IP, and then it can be fed into the oracles, meaning you can get that IP address data on chain, and you can block US users if that's what needs to be done. So it opens up a can of like fancy products we can implement, like better yield products, because hopping is so much cheaper. The AMMs, liquidity pools, and allow more participants, like smaller guys, to become the liquidity provider without paying all those ridiculous fees. So this is kind of like direction we guys are going towards. So also, I think there's a lot of market economic force, which changed my perception about this project and trying to put more effort into it. So I think number 1, the timing, DeFi POC is done. Most people already know the total value lock, right? The TVL is huge, like on Ethereum, and it's gaining on other blockchains, not just Solana. And then also for the past 2 years, if you talk to, if you follow the news, like lawmakers and Congress is trying to put their hand in DeFi. basically they want it to be compliant, taxable, and everything. And it's just like, if you want to connect to the retail customers, I think this is inevitable in the US and maybe globally. So also like the timing on financials, like, we see very low interest rate from banks, and we're seeing inflation is coming. Most people are telling me, like, on DeFi, they don't expect 8%, they expect 12%. And then some of the vaults are offering like ridiculous amount of yields. I don't know if that's sustainable. I think 8 to 10% is kind of like the fees that you pay for doing margin trading. But then the fee gets paid to the platforms right now on a traditional like a trading. And it's now back to the liquidity providers on blockchain, Ethereums. So that's why people are still able to maintain a relatively higher yield. And then also democratize access. As I said, if you want to become a liquidity provider, if you want to become a credit card company, right? Think about a hurdle that you need, like the licensing requirements, not for the little guys, right? But because the setup on the DeFi, everyone can become a liquidity provider and enjoy a return, the yield, like higher yield for risky products. So also Ethereum proved itself as a programmable money. A lot of possibilities you already see happening on Ethereum, and Solana is coming up with the real-time experience blockchain. I think that's very significant because the user experience improves. Now you can connect back into the Web 2.0 world. The number is just going to be like exponentially like bigger compared to right now. So competitors, there are a lot of NFTs proofs. Every hackathon, I get a proof of attendance token to show proof that I'm there. And of course, like NFT has been crazy these days, especially on Solana, like the monkey business. I think on average, their token worth like 80 grand or something. It's some ridiculous number. And then there are oracles like Chainlink and PIF Network on Solana, and we're actually using some of the infrastructure to build our own oracles. So and also ERC 1400, the one that security token standard, I think in most states behind institutions and Polymath. 998 is kind of like a composable token. 1155 is very similar, but it's being commonly used for NFTs with like, if you think about gaming with an avatar, you can have multiple items, you can have a helmet, you can have a sword, different things in a set, you use like 1155. So Molecule Protocol, the goal of this protocol is to be a middleware, meaning we inject a whitelisting protocol and also make it available like almost in real time. And then we work with the open service, like service providers on an open platform. So the difference also like between these projects, we actually forked Compound. We are forking Uniswap, and then we're integrating with Serum. So we don't want to just provide you an idea. We want to put out a product where the banks and institutions can say, okay, I have this lending protocol, everyone on it is compliant, and they will be continuously be compliant because we have the real-time or periodic check or expiration date on the token and things like that. And then they can just plug in the user directly. And then this is the goal of the product. Obviously, we're still early in building out all these offerings. And the other thing I think is very significant is that if we become a service provider, rather than JP Morgan Chase or Goldman Sachs develop their own mutual fund kind of product or DeFi product, we want to be a product provider where we can connect to all these different banks so we can aggregate the liquidity. I think eventually it's going to make more sense to all the institutions and also for the user, because you get a better price or experience with better liquidity. So I usually stop here. There are some leftover slides on how we do this. Like how do you define a molecule factory, basically the schema of generating a smart contract, and then also like the Solidity code that we added to inject into the code. And then also we did a demo of the whitelisting smart contract. But unfortunately, none of it is written in Python. I work with guys from the finance, and everyone is proficient in Python, so I don't need to touch it. And and basically focus more on the blockchain side of things. So this is kind of like the overview of the market protocol. So sorry, I didn't look at the chat window. Maybe, hey, Woody, you can help me out a little bit, like see if there's any questions, any concerns, you know.
Yeah, sure. Well, one of the things I learned about recently, I'm actually out in South Carolina right now, and I'm staying at Trevor's house, and we've been talking crypto for the last day or two. He knows a thing or two. So there's definitely a lot of jargon being thrown around there. I just want to make sure we took a moment to define some of the things. I think everyone's heard about NFTs. That stands for non-fungible token. And fungible is a portmanteau word used to describe, like fiat currency. It's a mashup, or it's smashing together two words, fundamental and interchangeable. And so the funny thing about cryptocurrency is like, okay, this is a new way to pay for things, but NFTs are kind of funny because it's a hot acronym, and it's like hard to really know exactly what that means unless you know what it's defined as. But basically it means like this thing can't be spent on anything. And NFTs have been hot lately because recently a digital artist sold one at a very popular, I think UK based auction house called Christie's. He sold what amounted to effectively a JPEG for almost $70 million. And it's like basically what it comes down to is you're using this distributed application platform to create a smart contract to basically say, okay, someone owns a digital image, which is such a weird concept because they fly around so easily on social media. And, maybe if you're diligent, you can dig around and find where something, first showed up on the internet. But unless you're really good at, delving into all possible websites on the internet, it's pretty hard to determine where something exactly started. And so like, whether it started somewhere or not, these days via the concept of an NFT and the data structure that it represents, you can at least assign ownership of the thing. And so there's a crazy amount of stuff getting developed. So that was one of them. Another one was oracles. Now, oracles are not referring to the database company that started back in the 70s. Oracles are something to do with knowing what's going on in other dexes, and that's another one. Dex is a decentralized exchange. So like, New York Stock Exchange is for stocks for publicly traded companies, but this is just publicly trading cryptocurrencies, right? That's what a DEX is.
Yeah, decentralized exchanges. That's what DEX is. It's meaning you don't need to go through any KYC. Anybody can participate as token swaps. So, yep.
Yeah. Did you define KYC too? Know your customer, for anyone that doesn't know.
So KYC is a legal requirement for every bank. So if you open a bank account, they're going to ask you for your driver license, passport, whatever data, like, the proof of address kind of thing. So this is just part of the legal compliance regulatory thing, so that, make sure that the ones that's blacklisted, like terrorists or known like criminal associations, are excluded from the financial system. And most people also know, like even for the like wheat industry, right? For example, federal laws still prohibit like, the wheat growers or like platforms to do business in the federal banking system. So even though it's legalized like in many states, including California. So those are the things like, the regulatory compliance people trying to make sure that, you don't have the bad people gaining access to the financial system. So know your customer is the basic requirement. If you go open an account on Coinbase, I think they're gonna require the same check, but it's different in different geolocations, obvious different countries. And also, I share a link with you guys. That's the NFT, non-fungible token. Thanks for explaining it, Woody. By market cap. It's ridiculous. Look at the market cap of DGen. That's the monkey business I was talking. Oh, this is the monkey business. DGen is like, I got confused with these guys, man. And so punks is like, a popular, but this is like new because Solana just launched their NFT not long ago, probably a month or two. And then Ethereum has gone nuts, like, with NFTs. I think the NBA one is really popular. There's like the NFT shop just have a deal with NBA players so that you have fantasy basically on NFT tokens and things like that. And I know I'm told like the NFT Bulls, like for example, like Chicago Bulls. So they won the championship, they own the rings, but now you can actually own a piece of it, just like have like a token representing. See, look at this, like legendary, like iconic, rare, and then they charge you a ridiculous amount of money. Oh, okay, this one's not bad, 92 each, 93 each. But good luck getting it at that price. And they have collaboration with like Shopify, and I think there's a crypto shop behind it to convert all the fiat money into the crypto wallet and also like purchases. So this is kind of like the NFT landscape. And also Oracle is a great explanation. Training is the best way to do, because blockchain is disconnected, right? It's just like a computing system. How do you feed the real life data into it? For example, like the temperature, if you do a sports betting on chain, so you need to feed the data, like which let's say San Francisco Warrior or Sacramento Kings, like who won the game, right? You want to publish that data onto the blockchain, and that's what the term Oracle is used on chain. So the oracles are basically the wormhole or the connection to the real world where you can pipe different kind of data onto the blockchain, so the smart contract can get access to it. Yep. Thanks, Mike. Absolutely. Like OpenC is the OG. OpenC is the OG. I bought some NFT on it as well. So they've been around for a while. There's a funny story, NFT almost closed the shop like 9 months ago until the entire NFT craze, and they raised at like a 1 billion valuation or something. It's like just huge turnaround because of the NFT. That's all I got, Woody.
That is great. Any questions for Calvin?
Hey, Calvin, quick question. I'm curious, rather than it always being like an add-in line of code to the Solidity contract, have you considered like more of a proxy contract approach where you can access the existing liquidity, but not do the proxy if they don't pass KYC? That way you can get access to the existing liquidity pools.
Yeah, absolutely. I think proxy contract is the ideal way to do it. We're trying to figure out a way to do that on Serum, right? But still, if we want to have a product that's compliant, we cannot tap into the DeFi liquidity, because all the participants on the current DeFi, none of them went through KYC. So we cannot have like a part of the population users have the KYC and part of them do not have it. So the idea
is not so much about who's trading, but it's more who's providing the liquidity.
It's both. So the traders and the liquidity providers, all of them needs to be KYC. So that's why we need a fresh start rather than a process smart contract. I think connecting to it is not that difficult, but we need to exclude that. We need our own fresh start where every participant is legally compliant. But that's a really good technical solution, however. Yeah, definitely.
Nice. So is it two of you working on this, or three? Is it you, Shane, and then this Andy guy?
Yeah, we kind of just port over the APIS project guys over here. Mostly molecule protocol is worked on by me. And then because, so a little bit background, Shane and Andrew on the list is a co-founder of my other project called APIS, which is the one that actually we guys presented in Python meetup before the pandemic in person. And the problem is like, when we were building a Titans Finance project, we figured out a lot of people are already doing the yield hopping and things like that. And it makes more sense and generates more value by open sourcing everything that we guys did on Ethereum and make it easy for people to get access or build on top of Ethereum. And that's kind of like the inception of like, we pivoted from Titans Finance as a product to a developer tool by open sourcing everything we guys build. And then we name it the APIs, basically because we want to provide simple APIs for people to build on top of it. So through the APIS project, which we started last October, and then we actually raised a round of fund with the foundation in Singapore to support the development efforts on this project. We built a team of 5 engineers, and then Shane and I working and making the product decisions and everything. So Andrew is also like the mastermind behind it. He's a DeFi guru. So he points out like, the problems existing with the mechanism that we implementing certain things. So this is kind of group of people building, and we guys actually build out a very comprehensive support for NFTs in both ERC 721 and 1155. So basically now you can do like one endpoint call and just generate or mint a token. And then we're doing more work on making it more decentralized. Like, you can put your token on sale without going to OpenC or any kind of marketplace. And you can, basically display all your NFT tokens just with no code, with WordPress or Webflow integration. And then you can just like put it on there and then anybody can buy or sell it. So these are like the base work that we guys focus on building in the APIS project. And because the existence of these endpoints, it makes me personally developing molecule protocol so much easier because I don't have to juggle with all the low level, like, coding, even smart contract. So now I can focus on building out a user experience and also using the endpoints to mint the tokens and representing everything. So that's why right now I'm the guy who's like, just doing proof of concept. And then the APIS project forked the Titans Finance already forked Compound, and then they are currently working on forking Uniswap V2. And once they've done it, I'm probably gonna just like take advantage of that and just like integrate with the molecule protocol and launch it as a product. So this is kind of like the background and the team situation. But the way, like, if you're looking at from a business standpoint, I think this is more institutional facing, and we need somebody who are more like capable or experienced in that category. So we're talking to the VCs, and they hoping that they can bring a real CEO more on the business development. And then I think the technology itself is not a challenge, but building out a technology quickly is going to enable us to have some kind of initial liquidity, the first mover advantage kind of like, thing. And these are the things like Shane and I are working on right now.
So you said you're going to fork Compound and Uniswap V2. You're doing that on Solana? Is Solana EVM based? Are you able to?
No, Solana is not EVM based. It's the V1 that we are targeting. So we do want to keep the roadmap on Ethereum because just because like the ecosystem, the size of the DeFi and all the proven smart contracts are already there. So we are just forking on Ethereum. Solana has a total different architecture. It doesn't support sharding, and it has a huge node because of the fast block time. And the development is very, very different. We learned how to develop on Solana this year, and then we're still learning. I think they are developing in a really fast pace.
Oops, and muted myself on the wrong thing. So you were previously doing stuff in Solidity though, right?
Yes. The hackathon is in Solidity. Everything was done in Solidity until like May. We started experimenting on Solana. So we have some proof of concept coding on Solana, but it's not yet ready, like, you know, as a standalone product. That's something that we are working on right now. Still on mute.
So is there anything out there that you've seen relatively close to this? I know the KYC concept is relatively fresh when it comes to DeFi, because a lot of people think of it as, oh, it's just purely anonymous. And so
Right. I think DeFi serves its purpose for the unbanked, as I point out here. But you know, from a technology standpoint, they build out a infrastructure that's so much cheaper to maintain. The only gatekeeper that you need is like all the participant once they are going through the KYC, and then you can just use it as like an engine, right, as a software service. So that's kind of like, you know, I think targeting for unbanked, it's great, right? It's very important for all those people in the regions. But at the same time, why do we block out the people who are already identified, compliant, you know, and banked? We should not lead them out of this, you know, benefits.
cool. Well, it sounds like you're looking for some people. You're looking for people in biz dev. Yeah. If I was to keep an eye or an ear out, what would be your ideal candidate?
Ideal candidate, we want people who have experience of, you know, maybe the people who are tired working at Ripple or something, really know the space, because I think they've been doing a lot of groundwork for talking to banks. Obviously, their focus is for remittance, you know, just like Stella and payments. But I think those are the same kind of people get in touch with banks, you know, offering the kind of services and have the experience of talking technology, making it understandable by business people. And those are the important like qualities we look for.
Well, it's too bad you're not still in California. You could just, you know, start the process of starting your own bank.
We do have a call with more neobanks who are crypto focused, and we were told, like, you know, they were looking for technology partner because they got one of the bank got all the patent. They actually patented all those like processes. I don't know how applicable it is, but definitely they haven't done the implementation. And then they like what market protocol is offering here. So we are in the process of working with some real banks. We want to do a POC, proof of concept. And then once we have that, I think, you know, just with a little bit of liquidity, bootstrap, and just like, you know, we can start talking to people and close real deals.
Very cool. So,
all right. I guess it's not too much like Python related. Sorry, guys. But yeah, there's a lot of blockchain talk here, though.
Yeah, absolutely. Hey, we don't guarantee this is always about Python. As it says in the description, some of the talks are less than technical, and they're not always about Python. I'd say this is pretty technical though. So, and crypto is exciting. So,
yeah, if you haven't heard about Solana, check it out. I think next year more people will hear about it. And then what matters, like who are the people behind it? I think FTX is behind it. FTX, if you are a basketball fan, you can see Miami Stadium is now the FTX Stadium. So they are really up and coming. And they've been sponsoring some of the major events, and also they're talking to MLB. I don't know if the deal is already done.
Yeah,
a lot of
every
people.
empire has an FTX logo on their shirt.
Oh yeah. FTX is gonna put its name out there, and then read about the founder, Sam Bankman-Fried. I think there was a huge coverage, like a long article on Yahoo Finance about this guy, and he's considered as like Elon Musk of crypto, and he's like basically very bullish on Solana. And his team built a Serum, which is like the first decentralized exchange on Solana.
So FTX, I thought you could only purchase that outside of the US.
No, there's FTX, not US.
Oh,
Yeah,
okay.
they
Like Binance,
started
not US.
exactly. They started FTX US and trying to get compliance and everything. They want to be the next Coinbase. That's what I see.
Well, so now with Molecule Protocol, you're not going to go like Mount Gox on us, are you?
So it is just a permission, right? We don't get our hands on anything. Yeah.
I learned that lesson. I was on Mount Gox. I'm on the list.
Oh my goodness. You guys are the
Permissionless.
OGs if you are on Mount Gox, man.
Yeah, where was that?
Eric, were you on it?
I was, but I was out.
Yeah, I got the email 2 days ago that they're resurrecting still working on the recovery efforts of funds. It's crazy. Half in Japanese, half in English.
Whoa.
Yeah. I mean, there's a lot of history there and very interesting stories. It's definitely for a different meetup and not for live stream.
Yeah. Look
Probably
up
we'll grab a
YouTube.
beer and talk.
Lots of stories.
Lots of stories.
But I think I just want to piggyback off of Calvin's lecture or talk. Is like I really think there will be a lot of opportunities in the legal and compliance world for tech in terms of software, because now let's say the old but the present system is trying to catch up, and they will eventually have something, some say in this world, right, Calvin? And this is, and I feel like Molecule will be one of the projects that would actually bridge that gap. So
to be honest, I'm a really bad person to talk about anything that's happening right now, because I make a pet with myself. Like, when I started working on crypto, I said, last year, actually before 2020, right, it was really stressful reading news, and it's like affecting my productivity so much. I said, I'm gonna cut out, from reading any news. I'm just gonna focus on learning the tech stuff. And then I'm relying people like Eric, some of friends in real life, tell me the important stories. So we have a guy who's like really connected in the community and everything. Unfortunately, he's not on the call. He's Canadian, and then he's the guy who's basically putting together more a separate deck of all the things that's happening on Twitter right now. I think that's something Joe Ciccolo would be really interested in, because it's all about the compliance, the Congress trying to put like their hands into the DeFi and trying to do some crazy things. But I'm out of the loop, but I got, briefed on the important things that's happening and see what can we do on the technology side. And so Eric, you may know a lot more than I do. But definitely I think it is the timing. It's really important. If we talk about this a year ago, most people from DeFi or crypto just say, hey, we're about, not dealing with government. We're about, permissionless, unbanked, right? It's like such a huge baggage, like, out there, like, you have to be away from the compliance to be part of the DeFi ecosystem. I really think that, why are we excluding people that they already went through, identified as like a legit citizen of the US, and then you cannot participate with all those great yields? What is the reason behind it, right? I don't think we should take a political stance or philosophical stance, like whatsoever. The way I see it is purely technology. And if we can do something with the technology that's benefiting anybody on this earth, we should do it. And we can do it, right? Of course, like, we have to be compliant and follow the law and everything, right? That's what I mean by everybody.
well, I think with technology, you just bring more transparency, right? You could bring more of that, so, and make it more equitable.
Yeah, I see it's more like democratized assets, right? Because in the current system, it's pretty much controlled by existing, dominant players. They have a lot of say and control, and just like the little guys, like we are like the credit unions or like very small little guys trying to survive in a bigger pond. And the technology is going to enable them to do it. Just like the self media, the rise of self media, like compared to like, media outlet used to control everything, all the news. Now you follow influencers, you follow people on Twitter, and they become part of the news channel. And it's like democratization of assets. And that's going to happen to the financial with blockchain technology.
I mean, the internet democratized information, right? So this is the next level, which is democratizing
finance. Yeah. It's going to be fun for the next 2 years. I really think so. Like, things really getting interesting now.
Well, the next decade, actually.
Next decade. Yeah. Hopefully it won't take that long.
I joined a DAO called the Bankless DAO, so I'll just put a plug out for that. If you're interested in
awesome.
Yeah. That's going to happen. Eventually.
DeFi, definitely check that out.
Yeah. And NFT is very tied to DAO as well. A lot of like a fractional ownership questions, like, what if majority want to sell, but some of the guy holding on and not willing to sell? So you defer to the DAO structure to vote on the NFTs, and NFTs representing the ownership of the DAO as well, and how much you can get paid for your services and things like that. So it's really like seeing different things interconnecting. It's fun.
Cool. Well, any other questions for Calvin? This has been awesome. I definitely, after being here in South Carolina and then this talk, and then obviously everything that's gone on in the last few years, I really need to start a crypto project. Although it sounds like if I want to keep up with it, starting a project's not the easiest way to keep up with the news.
Yeah, I really appreciate Woody for inviting me to talk. I know it's like maybe not too relevant, but but it is a combination of all the things that's happening, I think, which pushes like this project and the direction of things going. So thank you everyone. Feel free to reach out to me anytime. You can ask Woody, or you can find me on LinkedIn. My handle on LinkedIn is just like my name. So or you can reach out to me on Gmail. So that's what I got. Thank you so much, guys.
Cool. Calvin's on the Slack as well. I believe I sent a new.
Yes, I am.
Cool. Well, thanks for the talk, Calvin. Always a pleasure. It's always interesting to see what your big brain is working on. Sounds like a good one. If anyone wants to speak, here's a QR code. I don't know if anyone's ever used it. You can also talk to me on the meetup. You can talk to me on the Slack of the Discord, or email me, sackpie@woodyhooten.com. We have a mailing list with similar amount of usage. We might even start sending newsletters at some point, but there's the QR code for it. Before we go, anyone got any announcements, shout outs, what have you? Cool. Well, once more, shout out to Calvin and the rest of his team at the APIS and wherever else he's at, Hero and Titans Finance and
just the names.
Name dropping. Watch your feet. Cool. Well, thanks everyone. We'll see you again in a month. I believe next month we're going to have James Tejada from Cap Radio again, talking about some stuff he's doing to manage their membership as an NPR radio station.
Oh, wow. Interesting.
Yeah, should be pretty cool. He's a good one. If you check out the YouTube link or my YouTube channel, he's in there. Real sharp guy, real nice. Can't wait. But we'll see you guys all in a month. Thanks again for showing up.
Thanks again.
Bye, everyone.
Thank you. Bye.
Thank you, Woody. Thank you, guys. Bye.